Hello and welcome to another open source workplace video. Today I'm excited to introduce Mark Gilbreath, who is the CEO of Liquid Space. Mark, how are you doing, sir? And welcome to Open Source Workplace.
Thanks, Steve. Good to be with you. Doing well. As I joked
Good, good.
earlier, all alive. Priority one, check.
Yeah, no, absolutely. And I think a sense as we sort of run through this and go through this process, that's exactly what we're looking at. And one of the reasons I'm excited to have you on board, Mark, is really just to talk about the whole co-working space. Obviously, what Liquid Space is doing for that entire industry market segment is it's been great, and I'm really interested to hear and share your insights. So I'm looking forward to digging into that. But as we sit here today and we look middle of May, and you look 12 months ahead. What excites you about that outlook?
Well, not to be glib, and coming from somebody that suffered his way through COVID last month, and is totally fine. I appreciate the gravity of what's happening, right? In human terms, lost my neighbor. In economic terms, I follow the unemployment numbers. I see the cracks in the foundations of many different industries, and so that's heavy shit. But on the flip side, this is an extraordinary inflection point, I believe, for CRE. And I think, as the headlines have shown day after day, even in recent weeks, the willingness to change, the vision for change, the fundamental kind of reset in terms of how people think about what workplace is, where it is, how much of it I need, what measure of autonomy or authority I give to my employees about workplace. So many aspects of how CRE could be, or from our vantage point should be, that a small group of people have lobbied for a decade or more, are now being talked about at scale. And so I'm extremely excited and hopeful that in these next 12 months, we'll be able to retain a lot of the gains that are already being evidenced in this grand experiment when 90% of us are working from home. I mean, there are real gains to that, economically, life-work balance, environmentally. And that's not the end-all be-all answer. Working from home isn't the future of workplace, but it's a component. And so I'm excited to see how CRE reinvents itself or reimagines itself, and retaining as much of those gains as it can, because it's important. It's a big industry that needs to be better than it has been.
I totally get it, Mark. And you mentioned CRE and co-working, taking a hit. And what do you think is that future? Because we look at the market today. Everyone is working home, like you said. We will go back to the office in one form or another. Co-working, I believe, will be part of that future. What do you think those two elements play in the future of workplace?
Well, first off, let's go back and let's roll back the clock 10 weeks and pretend that COVID yet hadn't happened. And we'll bring that back to the discussion in a moment. But roll back to 10 weeks ago, or our innocence of January, when we could look back over the prior 10 years, even the last 3 years, and see this extraordinary growth in on-demand office, flexible office, of which co-working is a flavor. And for all the right reasons, it was on the rise. It was on the rise amongst freelancers, amongst startups, and most recently, it had really begun to find favor amongst large, even conservative enterprises. I mean, NASDAQ, your user of flexible office, co-working.
Yep. Yep.
So for all the right reasons, I said as well, because it was injecting flexibility, agility, resiliency, more engaging environments, different flavors of collaboration and serendipity. A number of really positive attributes were being injected into the somewhat conservative, intransigent sort of CRE landscape. And on top of that, it had been growing rapidly. At one level, you run the ticker tape. At one level last year, 50% of office absorption in the US was flexible office or co-working. Those are extraordinary numbers. Of course, at another level, if you looked at the real scale of co-working or on-demand office overall, it was still relatively small, still certainly less than 10% of the overall office footprint or workspace deployed. So there was a lot of reasons to be enthusiastic, in particular as large companies were embracing it and even predicting that it was going to be, looking forward, how naive we were. Looking forward, back in January, most large enterprises were pointing toward, yeah, it's going to, this flexible office co-working thing is going to be 10, 20, maybe 30% of my workplace in the next decade. Mm-hmm. Then COVID happens, right? And we've had to triage and hack out a new workplace. And of course, that workplace for most is home. But along with this experiment, there are a number of new sort of stressors or solve-fors that have to be a part of any workplace discussion now going forward. And so now let's look at flexible office or on-demand office through the lens of both history plus the new realities. New things we have to solve for that we took for granted in January and in last year. Health and safety, right? So, for Steve and Mark to leave the safeness of home to do work somewhere else, whether that's in a co-working space or a flex office suite or a traditional corporate headquarters, in any of those, doesn't matter if it's flexible or long-term, health and safety as a threshold is going to have to be addressed for my peace of mind as an individual, and also for my manager or my boss who's going to have some obligation and liability if they welcome me back in. That has to be addressed. I also think that for the indefinite future, economic uncertainty is with us, right? And so, the shock to the system of profits and survivability of companies is so severe. We haven't factored all that in yet. And the ability to predict business sort of pull and market activity levels for any company that sells things is going to be very challenging. So I think uncertainty is going to ratchet up an appetite amongst most occupiers for more flexibility or agility in their real estate outlay. That's a new factor with us. That plays toward co-working. And then lastly, I think is going to be the residual effect, or two other things, the residual effect of all of those employees, us, you and I, Steve, and the majority of others that are having this experiment. Like we are at home right now. For many of us, it's the first time that it's been sort of allowed or sanctioned. For many of us, we're finding that some of the time, maybe a good bit of our work day, we're relishing the level of clarity and focus and lack of distraction. We're getting shit done, like we're getting work done. And we're also demonstrating that to our managers and their bosses and ultimately the CEOs. When Gorman came out, CEO of Morgan Stanley came out, 3 weeks ago and declared, I think it was on Bloomberg, 90% of my employees are at home right now. We've had no major issues. Clearly, we will need much less real estate. So with that statement and similar statements that have come out from Barclays and from Twitter and from Eric Schmidt, former CEO of Google, countless statements, now the employee who has been given this latitude to have a work from home experience has an unlikely but incredibly powerful ally, the CFO. And the CFO is solving for his colleague, the CEO, for profitability, agility, cost savings. And in the face of economic uncertainty, what do CFOs do? They look for savings or efficiencies. And now that the most recent chorus of predictions, Gartner's got some great data out right now. They just finished a survey of 300 S&P CFOs. 74% said that they're going to have substantial upswings in the amount of work from home. Most said between 10 and 20% of employees, a 5x what it had been, will stay at home. Mm-hmm. And so bring that back to your question, like what's the outlook for co-working? Most of those things I've touched on, economic uncertainty that fuels companies wanting flexibility in office term, the interests of employees perhaps to work either from home or near home, those things play directly into the well-established flexible office economy. The one area of exposure, or two areas of exposure for the operators of co-working. One is more tactical, and another is going to be more enduring. At the tactical level, co-working, flexible office, office as a service, these are retail experiences. They're, and they, like every other business on Main Street, have been largely shut down during this period of interruption. And many of those firms don't have deep balance sheets or don't have a Masa-san behind them, fueling them with billions of dollars of capital. And so I do anticipate that there are going to be some that simply don't weather this period of revenue interruption and simply didn't have the capital to get through to what looks like a promised land on the other side. The other longer term issue that's going to start to manifest and be, I think, apparent when reentry begins and will carry forward into whatever new normal looks like, is going to be the extent to which the office form that co-working had produced is going to be what's relevant in the new reality of post-COVID. Will the physical environments, the designed environments, the space programs of co-working environments be optimal or even adequate? And on that score, I think you got to bring back in the topic of health and safety, both perceived and real. The signals are pretty loud and clear that we're receiving from our clientele. Strong bias now toward private environments, high concern around health and safety. Those things imply that the communal environment, the open desking amongst multiple different companies, which is a portion, not all, but a portion of the program, space program for many co-working operators, that likely will be much less relevant during the early stages of reentry and may be irrelevant. It could be as bad as simply not usable. That then poses a question. If I'm the co-working operator, do I think that that's going to change eventually and I'll just wait it out and, next year or the year after, people will want to use that again? That might be one path. Another might be, oh, you know what? The world has changed. My environment needs to change. I've got to be able to monetize my space, which means I've got to put capital in for a refit. And then we're back to the same challenge that's going to crush some firms, which is they may not have the balance sheet to do that. So,
yeah. No, I agree with you, Mark. I think co-working serviced offices play a big part in the future. That flexibility is key, paramount to some of the strategies I think enterprise clients are going to be looking at. But on your last point, I do think that they will have to invest some capital to adjust their structure, adjust how their programming is working, and that's where it really is going to be interesting to see who does survive, who does adjust the quickest, and who actually provides the best solution across their platform.
Yeah, and I think also, again, looking back to just pre-COVID, one of the most interesting stories from our vantage point of the last year or two has been an accelerating movement amongst institutional landlords. Firms like British Land and Boston Properties and Tishman and EQ now, Washington REIT, and a host of others had begun to step directly into the on-demand office economy, the flexible office economy. They saw the threat of being disintermediated again, just as they have been with brokers, but to a new type of customer, the flexible office customer. They also saw a profit and a margin opportunity. Hey, I'm at risk of not delivering flexible office. Moreover, if I do, that may end up being 10, 20, 30% or more of my asset strategy. I got to get into that game. So as we're now approaching, or not, as we're in this period of extraordinary pain, I think the institutional owners are going to be amongst the strong. And I think the enlightened ones are going to see the opportunity to put some smart capital investment into flexible office as a category. And that may make for some interesting unions with existing co-working operators who have a depth of operational knowledge. So we may see some reconstitution of how those business models work. There's been a lot of joint venturing going on over the last sort of chapter. But I would expect to see flexible office, on-demand office on the rise. I would expect to see owners more involved, not less. I expect to see the mid-tier and the best of breed in the pure co-working and serviced office firm. They'll survive if the market demands are too strong. And then hopefully the losses amongst the passion-driven smaller operators will be minimal, but I think there will be some, almost unavoidably.
Yeah, no, I appreciate all your insights. I appreciate you being so honest and transparent with your viewpoints, and I look to dig into this further with you, and sort of how we think the business model will shift over the coming months, because I think we all believe And I think the service providers also believe things have to change. So it'll be interesting to see how that goes. So Mark, for today, look, I appreciate your time. I appreciate you sharing, giving us Open Source Workplace your time and thoughts today.
My pleasure, Steve. Stay well.
Thank you, mate. Take care.